Hello and welcome to this edition of Own the Journey, where we have the opportunity to meet with incredible people from around the world. And today we're meeting with Mr. Jeremy Hill. Jeremy, thanks for being with us.
I'm excited to be here.
Well, tell us just a little bit about your story. JB Capital, you're managing partner and co-founder of that organization. And I know that you didn't come into it by all the traditional methods, so talk to us a little bit about that.
That is a story set for a place where we're drinking beer or whiskey. I think is probably perfect. I think that there are a lot of people and a lot of stories that come about because you have this wonderful, beautiful, happy plan of I'm going to go to school and get a good education and go to college and get a good job and have a Jeep Cherokee and a golden retriever and a house with a picket fence and all that other kind of stuff. And then there's guys like me, right? And then there's the real world, right? And I think the majority of time it is that there's more real world than there is fantasy, and there's more real world than the stuff that you see on TV. And those are the people and those are the stories that hopefully people like to hear. And so that's been a little bit of ours. So married young, started a couple of businesses, some good, some bad, some that will need another beer or two. But this last thing, JB Capital, kind of came together by happy accident. I found myself or almost fell into business one day. Had to come up with a name for it. My nickname for friends and stuff was JB, and so I guess we're going to call it JB Capital. Here we are.
Very good.
And that was 22, almost 23 years ago, and about $1 billion ago.
Holy cow!
Here we sit.
Yeah, here we sit. And the business itself is private lending, which is different than private equity and public lending, traditional institutions.
Yeah,
for those that aren't familiar with how that works, tell us just a little bit about that.
Yeah. So the business didn't always start as private lending, and so similar. So when the business started, we were a independent investment bank, for lack of a better word, right? You're a capital markets advisor. You're a money broker, deal finder, deal putter together, kind of a thing. And a fancy word for saying that is capital markets advisory, investment banking. And so basically we found it is that there was large groups of people and companies and projects that needed a differentiated source of capital. They needed something different than what their bank and their rich uncle could do. Yep. And that guy in New York wouldn't call them back, right? So how do I solve that problem? Well, we got really, really good at kind of helping companies and entrepreneurs and founders turn all the dials of the Rubik's Cube to solve those problems.
Wow.
And that was, real estate developers and projects. It was small banks that were emerging. It was technology and healthcare businesses. And it was just beautiful collection of different businesses and entrepreneurs. It is that fundamentally all had different businesses, but more often than not, underneath the things, they're trying to solve the same problems, right?
Yep.
And we got really good at helping them solve those problems.
That's amazing.
And then in 2019, we basically made the change in the business it is to go from being kind of banker, broker, advisor to investing off of my personal balance sheet.
Wow, that's a big risk.
And then, my wife's not here, is she? And then raising funds alongside that. And so we raised our first fund in 19. We're on fund 3 now. And now basically we're doing what we had done for other people functionally, right, as an advisor for ourselves. And that's the private lending aspect of it. So sorry, long answer to a short question.
Perfect. But well, when entrepreneurs are looking at different sources of capital, when does it make sense to come to an organization like you guys versus going to a traditional method or even to family and friends?
Yeah, for sure. I mean, it's getting to a point to where banks are becoming less and less relative, right? We've all run into these situations to where it is that the bank, the guy that you depended upon for the last 5, 10, 15, 20 years or something, now gets there and his hands are tied, or he can't do it, or one thing or another.
They become way too conservative. Can't take any risks.
They can't take any risk, right? And so what we've seen is interest rates have continued to rise, and we've moved into this kind of weirdo state in the economy right now, is now they're becoming even more and more risk adverse. They're pulling back even more.
Right.
And so coming out of the GFC, Great Financial Crisis in 2008, we're functionally about a third or so of the banks that we had. So going into 2008, we had 11,500 banks. Right now we're about 3,800. So whether you're a borrower or a consumer, you got fewer choices, right? So now we've got fewer choices and we've got banks pulling back. Everybody, small business and big business, are looking at alternative lending, private lending, right? And so whether it's rich uncle money or whether it's money from somebody like JB, typically companies come because their bank said no. Their bank can only get them kind of there, right? You and I need to borrow $5 million. Bank's comfortable with 4, and so now we're kind of there and kind of not.
Yeah.
Right? I mean, like, you can swim across the lake and drown 10 feet from shore, right? So what do you do when you only get kind of there, right? You come to guys like us. Or companies are using us as an alternative to equity, right? Like, they would rather, pay non-bank rates, but get the deal done while protecting their equity and not giving up 20 or 30% of their business to some, kid in San Francisco in a Patagonia vest, right?
Right.
Sorry for your San Francisco listeners, that kind of a thing, right?
I totally know what you're talking about.
Or they've already done that, and they don't want to go through that again, but they need that. They need some capital it is to where they can almost functionally rent equity for a year. How can I get that one more year of growth? How can I get that extra little bit it is to get there? And so it's typically one of those buckets that guys are coming, and we try to be thoughtful capital. Right?
I love it. And I love what you said about you can swim across the river and die, or drown 10 feet off the shore. That's so real in business. And I think there's a lot of business owners that wouldn't think to pause and say, I need to look at other options because I need to get all the way to the shore, and I need to have a guarantee to get all the way to the shore and not fall up short. So I think it's awesome that you guys are helping companies come together. And I'm sure that there's a piece of the business that isn't just lending money. I mean, you guys are astute business people, so I'm sure you're helping and advising and
Keep telling myself.
helping guys and girls make the right decisions in their business to get all the way to the shore.
Yeah. I mean, the lending business is different because it's easy to lend money and it's hard to get it back. Everything looks good when you're dating.
Sure.
And the things there that really become important, just like any business, you can fall in love with a business, but you can have crummy people, or you can fall in love with the people, but you got a crummy business. And so there's kind of multiple complexities that really go in to see if the thing's going to work or whether we're going to be able to help.
Yeah. So what advice would you give to entrepreneurs when they're putting that together and they don't know if they've got good business and good people? How do you get to the truth of that?
Well, it's funny because sometimes it takes a bit to figure out whether you have good business or good people. Yeah. Right. And buddy of mine, James Orsini, this morning, and he stole it from Gary, but he had said that, hiring is guessing and firing is knowing. Hiring is guessing, like, I think this is going to work out. Firing, you're like, yeah, no, they're a schmuck. We got to get rid of this guy, right? You already know.
Yeah.
A lot of times in business too, as you're growing, there's some things that are out of your control, right? I mean, we've seen businesses take COVID, take the pandemic that we went through. There were businesses through no fault of their own that got crushed or that went out of business and that'll never come back, right? And they could have been great people, great business, great everything else, but something else came in and gave them a knock, right? And now they're not around. And so how do you look at those things and how do you plan for those things when there's unforeseen circumstances? Sure. And as an investor, as a lender or advisor to these companies, how do you kind of bond around and insure around and protect on that when you're coming in and giving my money and giving our investors money, right? You got to think about those things.
For sure. Yeah, it's a big deal. Well, speaking of culture and what it means to have good people, I know that within your own organization, you spent some time and energy focused around bringing in the right people, surrounding yourself by smart folks. Yeah. Talk to us a little bit about how you have learned to grow culture and to make sure that you're doing things right within your own business.
If I can be candid, I learned by doing a shitty job first.
I think we all have.
It's something I'm getting better about because just like when we look at businesses and you look at people, you romanticize things to a certain degree. You romanticize this person or this investment or this business, this individual coming in to your organization, and they're going to help with this, and it's going to work out like this, and it's all going to be rainbows and roses and all this other kind of stuff. Right. And then a month later, you're going to be like, God, this person's an idiot. What was I thinking? And now how do I get rid of them? And so we're getting better at that. I think the things that we have, and everybody has heard this idea of this kind of hire slow and fire fast. If we can, and not all circumstances you can do this, but if we can, I try to bring people in and just say, let's just date for a while, right? Like, come in, see if you're going to do X function, whatever X job is, come in for 2 or 3 weeks it is. and we can compensate you, or we can hire you as a contractor first or something like that, because I don't want you to work for free. I'm not trying to take advantage of the situation. But before we decide if we're actually going to get married and I'm going to, let you into the family, like, let's make sure we're thinking the same kind of a thing, right?
Yeah, I love that.
And sometimes that works and sometimes it doesn't. We hired 2 people this last year that I had known that I was bullish on, that turned out to be terrible. And just a punch in the gut, man. Because people it is that I knew and cared about and that kind of a thing. And that just, so even the guys it is that work and advise on doing this don't always do it right.
Yeah, absolutely. We have a saying in our organization that we have to love the truth even when we don't like it. And I think that when it comes to hiring and evaluating people, that sometimes is tough, because you do romanticize. You have hope that people are going to be awesome and amazing, and then they come in and then they're shit. And it's like, oh, now I got to deal with this other problem.
Now I know why you were looking for a job.
Yeah, that's exactly right. So what do you think when you think about some of the big decisions that you have to make? I mean, you've had good decisions and bad decisions, as you alluded to, and part of where you've ended up is because you've had to take some hard rights, and you've not gone the traditional path down towards business and ended up where you're at. What would you say to entrepreneurs who are thinking that life is always that straight path, and we all know that that's never how you get there?
Yeah, you're wrong. I mean, there is very few things it is that tend to work exactly like you planned. Just as we're evaluating businesses, I mean, we look at dozens of businesses a month, dozens, probably 15 businesses a month, and everybody sends their plan and their business plan and their projection. Here's all the great things it is that we want to do, right, or that we're going to do, right, right after you give us money. The thing that we do know is all of them are wrong. Like, I know your projections are incorrect. They may be wrong up, they may be wrong down, but they're wrong. I've never had somebody go, son of a bitch, to the penny, look at that, right? Like, no, it's not, right? And so there are always constant changes and evolutions and small deviations, right? And so the thing that I heard years ago that, you hear these things every once in a while, there's 2 or 3 things it is that just stick with you, right?
Yeah.
And one of the ones was, you have to have this idea of being committed but not attached. Right? Like, I am committed to the end result, I'm just not attached to the process.
To the pathway.
To the path, right? Like, I'm committed to going home and seeing my wife after work today. I'm just not attached to taking the freeway, because if there's an accident, I'll just get off and I'll take another direction. But I'm still going home. Right. Right. And so for these entrepreneurs it is that are on this path, it is that I'm trying to build my business and do X. I'm trying to go here. I want to build this. I want to. Great. Does it really matter how you get there? No, I mean, just so long as you're going home, that's great. Just so long as you're getting to that point to where it is that you want to do, it really doesn't matter whether you take the freeway or the highway or a bus or just get there. Just get there. Be adaptable. Yes. You got to be adaptable in the business game. Yeah. So how do you evaluate that when you're looking at a deal? If the leader can adapt to it, if you pick up on the sense that they're just like set in their ways, they're not going to pivot, they're not going to adjust, is that a deal you're gonna back away from? If you can ascertain enough going into it to where you feel like it is that you can get that, yes. Often you don't know till you're in it. Yeah. Right? I mean, often you don't know till you're in it, and when you're in it, then you got to make those decisions. I think, over time we've got right around a dozen companies now, and there was a company. This is maybe 2.5 years ago. It is that we had invested in. I had known the CEO. We had taken a board position in the business. We're helping him grow. Loved his people loved him, and his people, more importantly, loved each other, right? Because candidly, some of the leaders you can replace. If the team's together and working, that's important. I did not step in as fast as I should have and fire him from his own company, which you should have. Yeah, that's rough. Yeah. Yeah. And it hurt the business. We ran into that situation recently, about 6-7 months ago. Actually, coincidentally, right after we moved to Phoenix. Welcome to the Valley, And hindsight being 20/20, we did not make that mistake. We immediately came in, kept the team together, and fired the entire management team, including the CEO. Wow. And there's those things that sometimes you just learn over time, right? So I don't even remember what the saying is, right? You make the mistake once, it's a learning lesson. If you make it twice, it's it's a choice or something like that. It's a habit, right? And so it's learning as you're going through these things.
Yeah, well, I think that's fantastic, and I think it's critical for business leaders to know that not only is there not always a straight path, but sometimes the business is better without you than it is with you, and that's a hard thing for business leaders to face.
Because you got to think most of these entrepreneurs, dude, it's such an ego play, right? Because so much of your DNA is your wife and your kids and your business, and more often than not, it's your business, and then it's your kids and then your wife, and so if you remove that from them, then it's these guys of, well, I don't know who I am, or whatever identity crisis crap they're having, right? But you have these, it's a huge ego play to get to a point to where it is that you realize it is that I may not be the best person to do this job. Doesn't mean it is that you're not valuable, but it means it is that maybe you should hire for your weaknesses, right? So you can focus on the stuff it is that you're good at that nobody does as good as you do. So
yeah, and that's fantastic. Well, I think there's not enough of that humility in the business place because so many CEOs wear that hat and put their stake in the ground and run the business all the way to the ground. Hire for your weaknesses.
But they're still in charge. They're still in charge on that last day of business.
So you talked about COVID and you talked about some of the challenges. So what are some of the bigger things that you've had to help businesses to navigate through as a board advisor, as an investor? I'm sure you've seen all kinds of good and all kinds of train wrecks. What are some of the lessons that you would want to make sure that people really listen to when it comes to working with an investment group and just running their own business?
Sure. So, God, so much. I think 3 or 4 there. One we just talked about is there's a point of self-actualization to where you realize it is that as good as you are, you've gotten the business here. But if you want the business to go there, you may not be that guy. You may need some help. Doesn't mean you need to remove yourself, but it does mean to say that there's 3 or 4 things it is that Tom is the best at that nobody can do like you. Those are the things that you should focus on.
And just stop.
And the other, right, and let the other people focus on the shit that you don't want to do, or that candidly they're probably better at than you, or better at than me, right? I think that's one. I think the other thing is, too, is you need to realize when it is that you need to let somebody go, and once you're getting to that point to where you're like, I feel like Joe, Mary, Martha, whoever it is needs to go. They probably should have gone 3 months ago. Because you've known it for a while. You're just now beginning that level of acceptance. People don't understand how much of a cancer that can be in your organization to let somebody who's either negative or not pulling their weight or something else permeate the organization. Like it's affecting the overall business more than you know, and that needs to be done quickly. I think the other thing, when it does time to cut, because one of the things it is that you're always looking at for these growing businesses is balancing cash flow, right? Sometimes you got more money than month, and more often, it's more often than what it is, right? And so when you get to that period of time, especially if you're coming to us, like I don't mind looking at businesses it is that are break even or that are burning a little bit of cash, but if something changes tomorrow, like if there's no more money coming to save you, if there's no new customers coming, on board, what do you need to do for your business tomorrow? It is to immediately change that you're going to continue to be in business, right? Like, what do you need to outsource? Who do you need to let go? What do you need to change? Maybe you don't need a fancy ass office. Maybe you can do something, right? Like all of those changes, when you make those changes, add 20%.
Wow.
Because it's that death by paper cut kind of thing. Well, we should probably let 10 people go. I'm going to start with 6. No, dude, you should start with 12. You can always hire somebody back.
I think that's really good advice. I had a mentor of mine who the death by the paper cut, who was involved as a board member in a software company. Market pivoted. They made small changes, and then the investors finally said, "No, get real." And then they had to make radical changes, and it killed the culture of the business, and all kinds of things happened. And so I think your advice is really good, and I love the add 20% because I think it's very real. The other thing that I loved what you said is is when it comes to recognizing when it's time to let somebody go. I mean, I had somebody tell me once, I wish I would have taken longer to fire that asshole. Said no one ever.
Said no one ever.
Yeah,
right, exactly.
yeah. So I think when we realize whether they're an asshole, or whether it's somebody who's toxic, or whether there's just not producing, don't drag it out and make it happen sooner.
Well, I don't think people. I mean, so yes, I agree with you. I don't think people realize the effect that permeates the organization. I also don't think people take into context the fact it is of how your employees' perspective of how they're viewing you and your leadership is as well, because they're looking at going, why hasn't Jeremy got rid of this guy? He's been an idiot for 6 months. Tom's still putting up with that shit. I can't. Right. Been
there, done that.
Yeah.
Yes. And like you said in the very beginning, you have hope. You think you can coach them out of it. You think you can lead them through it.
Yeah.
And sometimes you need to give somebody some grace, but sometimes it's not going to do any good, and you need to cut your losses. It's really hard. So when you think about the way that you do investing and the way that you run the organization, one of the things I know that's important to you is personal values, your core values within the business, core values in the way that you invest. And I'm sure, and I don't know the details of your business by any means, but people are trusting you with large amounts of money and saying, deploy this in a way that's responsible and meaningful and is going to have a return. So how do you blend all of the core values and the personal beliefs into the business in the way that you take on investors, which I'm sure you have a process for that, and then the way that you run day to day?
Need more beer.
It's a big question.
For us, one of the things it is that so for our funds themselves, our funds have a certain focus, right? Like in our corporate credit fund, we invest in these 3 or 4 assets, and that's it, right?
Okay.
So we don't, for us, it's kind of software and technology, healthcare and health tech, direct to consumer, and then the upper end of professional services. So law firms, CPA firms, wealth management businesses, that kind of thing. I don't do crypto, cannabis, Bitcoin, Nigerian blood diamonds, whatever esoteric deal. We don't do good ideas on a cocktail napkin. Like these are businesses that are up, running, stable, and now at an inflection point for one reason or another. When we're looking at those businesses, the things it is that are ultimately important to us is, number one, do you kind of, for the first blush, right? Like, do you meet the mandate that we do, right? If this is where we're investing and you're investing and you're over here, well, then you're just kind of not in our sweet spot, right? And then size-wise and otherwise. But then ultimately you're looking at, okay, who is this person it is that I'm working with? Is their ask for capital a prudent and justifiable? Are you a $5 million business that's looking for $50 million and you only want to pay 5%? I'll have what he's drinking. Like, no, what's wrong with you, right? And so do those things kind of make sense? Can I get behind what it is that you're doing there? How is the people in the organization, and how do those people think and act and interact as with you? And going through all these things takes us 4, 5, 6 weeks. Ultimately, the things that we come down to are a couple things. Ultimately, do I like this person? If I'm going to see this person once a month, if I'm going to talk to them once a week, and we're going to be together for the next 2 or 3 years, do you take advice? Do you take counsel? Are you kind of like we said, I'm always right, beat your chest and that kind of thing? Because if we can't guide, if we can't counsel, if we can't provide, thoughts that help you accelerate your business, then we should probably not do this. If you're a prick, we should probably not do this, right? Depending upon where you are, where you vote, where you all these other kinds of things, right? There is a psyche of the person it is that either does or doesn't make sense, that our values may not be aligned for how it is that we're dealing with conflict later. And we've tried to be, more thoughtful and hold hands and Edie Brickell and love the whole world, and it hasn't fucking worked out.
Yeah, look at California.
Right? Look at California. Shitty as that is to say, but that's what it is. And you look at that kind of stuff, and I'm like, okay, well, we're entrusted with these people's money. This is their savings account. These are their retirements. These are their fucking kids' accounts. These are we have to make good decisions. And one of the key theses is that if the only value that we bring to the table is money, I shouldn't give it and you shouldn't take it. Right? There needs to be something additionally accretive by way of our involvement in your business that helps you go from A to B faster or better or smarter or something, right? Because if it's just money, somebody's always got more money than you do.
Right.
Somebody always give you a better rate, right? Like it has to be something more than just money. If it's not, then we just shouldn't do the deal.
I love that, and I think that's what all business fundamentally comes down to, personal alignment around values, and is it a win-win? Are they coachable? Are they going to learn? And are they going to let you be a part of that process to make them better? I love it all the way around. Yeah. So when you think about in bringing investors in, what's the demographic of a good investor for you as well?
Sure. Somebody extraordinarily wealthy who won't call me if they have questions. No, just kidding. The majority of our investors are high net worth or ultra high net worth individuals or families. They're wealth managers, RAs, and family offices. We don't have any institutional capital. Kind of not good at that. Not sure I want to learn. But we've been really good at that. Probably half of our business is individuals, high net worth families, Joe and Martha, the rich family kind of a thing it is that have exited a business and now we're looking to put their capital to work to do something else, right? And then a lot of it's, family offices, wealth managers, that kind of thing that are managing money on behalf of somebody. So everybody's an accredited investor or what's called a qualified purchaser. That part is done well for us. Really the guys that are coming to us are the folks it is that are looking for income. Right, they're looking for something it is that is kind of pseudo mailbox money, with a little bit of upside. So
that's awesome. And I think one of the things that has changed in that you alluded to earlier in the marketplace is what it means to get a business off the ground. But then there's that whole gear about what it takes, whether it's 25 employees, 50 employees, 100 employees, but how do you hit the rocket ship? How do you get to that next level? What have you seen that businesses do well when they hit that gear and take off that you would share with folks?
A lot of it I think depends upon the type of business, right? When you're looking at businesses, you kind of have two big buckets, and that's a generalist way of saying it, but you have lifestyle businesses. And then you've got businesses ultimately that you're building with the intent to monetize someday. A lifestyle business is typically, an individual or a husband and wife that have started a business and 10 years later now they've got, 20 trucks and they're like, where'd all these people come from? Right? It was us a little bit ago and now it's me plus 2 plus 10 plus 20 plus whatever it is. And those lifestyle businesses is really, that business is your family's life, right? You run your dogs through it and your boat through it and your lake house through it and everything else through it, right? But there's really no pot of gold at the end of the rainbow it is that you're going to go public or sell to your competitors or do whatever. You're going to get too tired to come to work one day. You're going to try to sell it to your employees. Or you're just going to turn off the lights and maybe see if you can guilt your kids into taking it or something, right? Like that's a lifestyle business. There's businesses as well it is that you are building with the intent it is that I'm going to build and create something with the hopes that I'm going to, ring the bell, that I'm going to sell it, that I'm going to do whatever. You operate those businesses and you finance those businesses and you plan for those businesses completely differently, right? And so for those, back to your question, for those guys it is that are leading to a point to where it is that they are growing, a lot of that for their growth has to depend on, number one, cash flow. What can you afford to invest back into your business, right? And then number two, how are you capitalized? So if you're capitalized by a lender, your plans and how much money you're reinvesting may be different depending upon your level of debt service to somebody like me. If it's private equity, you got to understand that guy's time horizon is different than a venture capitalist. Venture capitalists, hey, we're kind of 2 to 3 years, I want to turn this thing to whereas, and we have certain expectations. That's why it is that everything's focused on growth. Nobody needs to make money, just grow. You're like, what idiot is giving you this advice? And then private equity is completely different because it's a longer horizon it is, and they really want to focus on building kind of a core foundation of the business that's going to be able to last through things and then focus on cash flow. But then their horizon may be 5 to 10 years, right? So a lot of that advice is going to depend again on cash flow and how you're capitalized.
Yeah, I love it. I think one of the things that it took us a while to learn inside of our organization was what does it mean to have safety in the business? So have enough cash on hand to handle the pandemic and to be able to reinvest in the growth.
Sure.
And I think a lot of businesses don't get there soon enough. They run cash poor forever. They get to a point where it's like, hey, I need to drop in, $100,000 to make that big hire, or, $1 million into some expansion, and they have no cash and no capability doing that because they didn't plan at all. And I think what I'm hearing you say is one of the things that you bring to the table is the coaching and the mentoring to help them to navigate through that and make better decisions about how to build safety into it and how to invest in the future so that it's not just a good investment, but a good sustainable business for everybody.
Dude, you're hired. That sounds great. Yeah. Hey, PR? You do PR work at all? That'd be awesome.
Yeah, let's do it. Yeah.
It is. I mean, again, that goes back to that thing of it's got to be more than just capital, right? Again, because money can come from anywhere, right? And so it has to be something that there's going to be this relation. It is that we're working together over a couple of years to kind of help coach you through, think you through, help you through these decisions, right? And so the things it is that we've found now again, we've been doing this 22, 23 years, but from a fund side to where it's my money and our investors' money, this has been almost 5 years now. And you find it is that you end up becoming kind of the first person it is that they call when they have good news. When they landed a contract, they got this deal, they got the hire, they got whatever it was, that we typically hear same day, right? Typically also the Dr. Phil counseling session of the world's coming to an end and whatever else, right? How do I deal with this? And so I didn't realize going into this how actual personal it would become. I think that's one of the things it is that we don't talk enough of about in our business, especially with our investors. It is on what's the difference in us and a BlackRock or Apollo or somebody of the big guys, right?
Yeah.
Is that there really is a very personal nature to this, because the guy with a small business with 25 employees is a hell of a lot different and more meaningful and something more that you can touch than BlackRock doing another $3 billion deal with some company I've never heard of.
Right. Yeah. Well, I mean, to them, the business is very personal, like you said. It's oftentimes their whole identity.
It's their whole identity. It's how their kids go to school.
Yeah,
it's how they're everything.
Support their family. Yeah, I think that's very real. The other thing that I'm hearing through this, that I love that I haven't done a good enough job, because we've made some small investments here and there, but is likability. I mean, just like you're going to be working with them, you're going to be rubbing elbows, you're going to be down in the ditches digging some things out, and you got to like the person. And communication is key to up both the good and the bad. And I think entrepreneurs sometimes have a tendency to celebrate the wins and sometimes kind of like hide away from the bad news.
Absolutely.
And to really get the best out of the partnership, you have to share both, I think.
Yes.
And that's really where the coaching comes together.
It's like that for us in the businesses that we invest in, but also like that for us and the investors, right? Everybody wants to talk about their great returns, but they don't want to talk about the mistake it is that they made. Right?
Yeah.
You definitely
screw up.
Yeah.
Yeah.
Right? And we dealt with that for the first time 2 years ago, 18 months ago.
Yeah.
To where we had to declare our first loss.
Oh, wow.
As an investor, as a lender, it's inevitable.
Yeah.
Right? It's law of averages. It's going to happen.
Sure.
It doesn't matter whether it's me, Bank of America, Antares, it's going to happen, right? But going back to that personal thing of it, it wrecked me.
Yeah.
I was a disaster.
I bet.
And you don't, and coming forth and going out to, we have a couple hundred investors at this period of time, right?
Yeah.
And so going out to a couple hundred investors and having to tell them that story, it's very humbling.
It is very humbling.
It's very humbling. But those are the things too, you go back to about just being real, right? Like this is, business, whether it's a small business, whether it is that you're investing, whether it is that it's, Phoenix Beer, where it is that we're at, right? It doesn't matter. I mean, this is a real game, right? And
there's winners and losers.
And there is winners and losers, right? And when you lose, it fucking sucks.
Yeah, it hurts
so
pretty bad.
Yeah, no kidding.
How did your investors deal with it? I'm sure you were very candid. You're not a guy that beats around the bush. That's obvious. So, I mean, when you're going to them, you're like, hey, we got a loser here. We had to shut it down.
What's interesting is that, law of averages says you ain't gonna make everybody happy. So we had, out of whatever, 100, 150 people at the time, or at the time, and that one was, I think, about 100 people, we had 2 or 3 people that were extraordinarily pissed. We had 5 or 6 people that called and just said, okay, what happened? And they're like, wow, that sucks. Well, you'll do better in the next one. 2-minute conversation.
Right.
And then we had 5 or 6 guys that ended up calling up and going, well, congratulations, you're officially a lender. I was like, what? This is weird, right? And then 80, 90 people I didn't even hear anything from. They're just, okay. So it's part of that too, is that we have professional investors, right? Like if somebody's giving us $100,000, it's not the last $100,000 and they're calling me every day going, dear God, are you okay? Right? Like that's not our people. But nobody likes to get hit. Nobody likes to take a loss. Yeah. And so, there's what it is, and that's what it is, and we're back at it again and seeing what it is that we can do to do better, right?
So what's the next fund look like for you guys? Have you started thinking about it?
Yeah, I mean, so we're on Fund 3 right now. I mean, so we have 2 funds that are open. Our first fund is closed. These 2 funds we have open. So we have one on the corporate credit side and one on the real estate credit side, and we're overwhelmed.
Wow.
Part of that is a lot to do with the economy and what's going on with finance and interest rates and banks pulling back, right? I mean, people need to solve problems, right? And whether it's rich uncle money or JB money or something else money, they're trying to figure out how to solve those problems, right? And so if we're ultimately not the person, we're trying to help them with the person, but we're overwhelmed with demand.
Wow.
Between our corporate side and our real estate side, we're seeing probably $125 to $150 million a month.
Wow.
And half of it is crap, right? Like half of it, nobody should give money to these people, right? Including us, right? Yeah. But half of it, there's just some extraordinary businesses that are really, they're not getting the attention it is that they deserve because what's going on in the market right now, right? And so it's us, kind of trying to find those needles in the haystack there that we can get involved and help with.
Yeah, there's got to be kind of, there has to be a certain reward and a feel good that comes from it when you take a business and help them do great things.
It is. So you love it because we're kind of solving the same problem every day, but we're solving it in such a nuanced, differentiated way because today I'm looking at healthcare, tomorrow software, tomorrow direct-to-consumer, tomorrow law firm, next week this, and I love the variety of that. The ability to be able to come in and hopefully hold hands with somebody and kind of lubricate their efforts for what it is that they're trying to do definitely makes you feel good to a degree, but it is also so unbelievably validating for that person because there's so many people, and probably a lot of us that are listening that have been on the other side there to where they're like, why does nobody see this? Right. I'm trying to do X, Y, Z. I'm just trying to get here. I need to open this. I need to hire X. Am I the only one that sees this? Right? And so us coming in and be able to coming alongside these guys and add some capital to their efforts to kind of breathe life into what it is that they're doing is just wonderful. That's so awesome. It's just wonderful.
That is awesome. Yeah. Well, I know along the way you've made some just critical partnerships and developed some really important relationships. So when you think about your journey in the business itself and all the things, how has bringing in the right partners, the right partnerships, and having even the right mentors in your life made the difference in helping you to get where you're at?
Tons. I mean, for every aspect of the business. So from a business development aspect, we learned, or I learned years ago that 1-to-1, I was going to kill myself. There's not enough hours in the day. How am I going to get all this work done? How am I going to do all this kind of thing? But moving into this world to where it is that you had this one-to-many approach. This one-to-many approach for our business came for that if I have a good story and I tell a good story and I develop a degree of credibility it is with an M&A attorney in my town, that M&A attorney has got 50 clients. So now by proxy, I'm getting credibility with them. So anytime those 50 guys has an issue it is, the M&A attorney, first guy he's going to call is me. If I had to go develop credibility with all 50 of those guys, my hair's going to fall out when I'm 20, right?
Absolutely.
And so taking that kind of aspect, it is from a business development standpoint, it has really helped us get access to an extraordinary breadth of opportunities, right? And so these were M&A attorneys and turnaround guys and trustees and judges and bankers and attorneys and CPAs and fundless sponsors and independent sponsors and this 20 years of kind of putting deals together before we started investing as a principal kind of unconsciously set us up perfectly for doing what it is that we're doing now.
Right.
I think equally as, if not more important than that, has really been developing kind of counseling relationships, mentoring relationships. You know, there is this thing of the more I learn, the more I realize how much I don't know, right? You know,
100%.
Right, exactly. And then my wife will remind me of the rest of the things that I don't know. But it's this idea of really kind of putting together your kind of your own Knights of the Round Table. It is to not necessarily make the decisions for you, but to maybe help you see your blind spots, right? So when we're looking at Joe's software business, whatever the business is, right? Like, I mean, we'll go through and we'll underwrite and we'll look and we'll take it to our credit committee and I'll send it to my CFO. Well, then after all that's kind of done, we'll put together a strategy. I'll send it back to them and say, here's kind of the strategy and the structure we're going with. Poke holes. They'll come back and give me things that I haven't thought about yet.
Right.
And then we do two other things. A friend of mine is the senior partner, manages like the Western 40 states for one of the largest CPA firms in the world. And I'll send it to him and say, Paul, here's what we're doing. Here's the structure. Here's this. What am I missing? And then if it's a particular software business, coffee shop, whatever it is, I'll find somebody in our network it's an expert that has done nothing but that kind of software, or that kind of coffee cup, or that kind of whatever it is, and bring them in to sit alongside us as a board member and say, we're going to need Big Brother. I can't sit Big Brother on 20 companies, right? And so we find somebody that's in our network that we compensate to kind of help us make those thoughtful decisions right? Because again, if I stand in front of a mirror long enough, I can convince myself I'm good looking, right? You know, that doesn't mean it's true, right?
Yeah.
So it's that same idea of making sure that you're pulling people around you. It is to help you make better decisions,
Blind
right?
spots and weaknesses.
Totally. Yeah, totally.
Yeah, absolutely love it. Will, I know that you guys have not just focused in a single area. You're in many places around the United States, in Canada even. So how do you go from local to national? I mean, is it just those relationships you were talking about?
Yeah, it is. I mean, on our corporate side, we kind of invest anywhere USA. Real estate is so different, and even there's microcosms of economies that are different, right? Because it's not just Phoenix. We're in Phoenix today, right? If I'm looking at a multifamily deal in Phoenix, well, that's different than a multifamily deal in Scottsdale versus Paradise Valley versus North Phoenix versus Tucson. So guys that say that, oh, well, we're specialists and we can do XYZ anywhere in the world. Well, you're a moron. No, you can't, right? So how are you loaning in Phoenix and also loaning in Tempe or in like Tallahassee, Florida or something, right? Like, you have to understand that economy, and the only way that you can actually understand the nuances of that economy is to work with somebody there or actually go there. So if we're looking at something from a real estate standpoint, it's kind of like, okay, this looks great and we see everything. Jump on an airplane. Right? Because you're not going to show me in your sim or your pitch deck that you're across the street from Pet Cemetery, right? or something, right? You're not going to show me, oh, that didn't make the flyer. No kidding, really, you know, right? And so going and getting in that community and finding out what's going on above and beyond what it is that I can see on paper is critical. And then leveraging somebody in that market it is there to also give us advice and counsel about the things it is that are the underneath of things. What's going on there that I'm not getting directly from these guys, right?
Yeah.
And that's what helps decisions for us.
I love that, and again, it's bring in that expert, cover your blind spots.
Yeah.
What am I not seeing? Get that local knowledge of
sure.
what's going on. Yeah,
For sure.
Well, Jeremy, I want to raise a glass to you and say thanks for taking the time and congratulations for owning your journey.
I enjoyed it, buddy. Thank you so much.
Thank you.